everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Following the conclusion of the National Day holiday, spot steel prices have declined somewhat. Domestically, spot prices of hot-rolled coils have remained stable, while rebar prices have dropped by 20 renminbi per ton. On the macro front, the game between China and the United States has intensified. China's exercise of long-arm jurisdiction over rare earth exports and imposition of fees on U.S. ships have led Trump to propose a 100% tariff hike on China. However, the specific implementation dates for both sides' policies are set for after November, so there may still be room for mitigation regarding these policies. It is necessary to further monitor the negotiations between Chinese and U.S. leaders at the Asia-Pacific Economic Cooperation (APEC) Forum in South Korea at the end of this month. Domestically, there are reports that relevant stimulus policies may be introduced by the end of October to boost the fourth quarter economy, with a relatively large number of domestic counter-cyclical policies in place. Nevertheless, amid unstable overseas conditions, the overall macro sentiment remains highly volatile. On the industrial side, the weekly output of the 5 major steel products, long steel, plate, pipe, profile and rebar, has decreased by 37,600 tons. This week, molten iron output remained unchanged at 2.41 million tons per day. Weekly output of hot-rolled coils fell by 14,000 tons, and rebar output dropped by 36,200 tons, with part of the molten iron being diverted to medium plate production. Recently, steel mills' profits have started to decline, and the pace of steel production resumption after the holiday will slow down. On the demand side, affected by the domestic holiday, weekly demand decreased by 1.6937 million tons. Due to pre-holiday stockpiling and reduced demand from construction sites during the holiday period, apparent demand has dropped significantly. Going forward, the market will focus primarily on the speed and scale of demand recovery. In terms of inventory, the 5 major steel products have seen a substantial weekly inventory buildup of 1.2786 million tons, with both social inventories and mill inventories increasing to a certain extent. Specifically, rebar inventories rose by 573,900 tons, while hot-rolled coil inventories increased by 323,200 tons. In summary, it will take some time for post-National Day steel demand to recover, and the market is more concerned about the speed of this recovery. If demand rebounds slowly or output remains relatively high, the market will turn more pessimistic about steel performance during the peak season. The post-holiday price decline, which followed the pre-holiday price surge driven by stockpiling, also reflects the current weak demand absorption capacity. As sales prices approach steel production costs, raw materials will also begin to face downward pressure from falling molten iron output. Although raw material prices are relatively firm due to the current high molten iron output, if steel demand recovery remains limited in the future, rising contradictions will further lead to a drop in raw material prices. Therefore, before output falls to a reasonable level, even if high molten iron output keeps raw material prices firm, the room for steel price increases will be limited. Looking ahead, we need to further monitor the speed of post-National Day demand recovery and the status of overseas export orders amid low prices. Thus, in terms of procurement, it is only recommended to purchase based on rigid demand. From the institutional perspective, domestic macro sentiments such as the anti-involution, drive and production cuts have been creating greater disruptions. However, the current fundamentals are exerting downward pressure on prices, and this pressure may intensify. The 4th plenary session of the 20th Central Committee of the Communist Party of China is scheduled to be held in late October. Therefore, in the short term, after rebar prices fall below the cost level, the supporting force has somewhat strengthened. That said, prospects for a rebound should not be overly optimistic. Additionally, trade frictions have intensified, further increasing uncertainties surrounding exports. To sum up, steel prices have found support at the bottom recently. In terms of product categories, the seasonal demand for construction materials requires further observation, and rigid demand will be dominated by on-demand procurement. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.